So you can look at these things and you can really try and build your business, things you are already going to do, in a way where they can become tax write-offs. The thing is even if it's only $3,000, $4,000, $5,000 a year, it's not just 1 year. You can do this every single year for the rest of your life. So if you're gonna, between now and retirement, if that's gonna be 30 years, that might be worth $100,000, $150,000 for you. Hey everybody, Derick Van Ness here, wealth strategist, investor, life adventurer. And today, if you have a primary residence and you're not using that to get massive tax advantages, you're totally missing the boat. You're leaving money on the table. And at the end of this video, if you listen through this, you're going to know exactly how to turn your primary home into something that can be a nice tax write-off, more than just your interest in the things that most people do, but really put true dollars and cents back in your pocket. So I want to share that with you. Now, it's interesting because the story behind this, I don't know the exact details, but essentially, whether you know it or not, there's a golf tournament, the biggest golf tournament I think of the year, called the Masters, and it takes place in Augusta, Georgia. And what happens during the 2 weeks around that golf tournament is a ton of people come into the golf area and they need a place to stay. Well, Augusta, Georgia is not that big a place. Tons of people coming in, tons of rich people coming in. And so it can become a very profitable 2-week period for hotels and restaurants and so forth, but also for people to rent out their homes, right? So as it turns out, there were some influential people who lived there, probably politicians who had homes there. They wanted to be able to rent out their home in Augusta, Georgia for that 2-week period and not have to pay taxes, income taxes, on that rental income. So I don't know the in-depth story, but essentially what happened was, due to that, it got written into the tax code, and it's often referred to as the Agusta Rule, right? So this is something you can do, especially if you're a business owner. This is primarily you. Non-business owners can do this too. It's just a little bit different, so we'll go through the difference here. But the reality is you can do that. So I'm going to tell you totally how to do that, but before I do that, if you like this kind of content, you want real money tips that put real money in your pocket, please like this video, pass it on to other people so that the YouTube algorithm pushes it out. Also, subscribe to the channel. We do a couple of these 2 to 3 videos a week and try to let people know, everything related to money, finances, and living a big life. And would love it if you'd subscribe. If you subscribe, put a comment down below that says I subscribed. I'll give you a personal welcome. And just appreciate the support because it really helps us to reach more people. Anyway, so here's how the Agusta Rule works. Essentially, and my disclaimer is this, I'm not a CPA. This isn't perfect for everybody, but applies to a lot of people. So talk to your tax professional, talk to your CPA. If you don't have a good one, reach out to us or let me know in the comments. We can get you in alignment with someone who understands this because you want to do it right. But essentially, here's what it is. You can rent out your primary residence for up to 14 days a year, and you don't have to pay taxes on that income. So if you're a business owner, you can actually rent your home out to your business up to 14 days a year. So if you have holiday parties, if you have retreats, if you do trainings and so forth and use your primary home, your business can rent your home from you personally and pay you for that. Right? All that income that comes in, you don't have to pay taxes on. Now, let's say you were going to use, how you do this to document it, make sure it's done effectively, is let's say you were going to use 1,000 square feet, your kitchen, your living room, some of the back patio area, whatever that looks like. You can look online, or you can go to a hotel or an event center or somewhere similar and see what would they charge for you to have that for the day, to use it for the day or 2 days or however many days. Right? Get some quotes, and then you can charge yourself something consistent with that. So let's say it was $1,000 a day that you could get for your primary residence. You can rent that to your business for those 14 days throughout the year. You should have a lease agreement. The money should come from the business to you personally, just like you would do it if it was a completely separate person you were renting from or that you were renting to. That money comes over. Now you've got documentation. Have a copy or two of the quotes, and now you know that your quotes are legitimate, and you can write that off. So let's say you got $1,000 a day for 14 days, and you were in the 30%, 27% tax bracket, that's probably going to save you somewhere in the neighborhood $3,000-$4,000 a year. I know it's not a total home run for everybody. If you've got a big, beautiful house, it might be more than that. Also, if you're in an area like I live in Salt Lake City, and during Sundance, the film festival, houses here rent for a ton more. Or when the LDS Church has their conferences, right? If you're doing an event on the same weekend as that, you can rent your home out. You may be able to get a lot more in those prime weekends if that's when your business chooses to rent the property, right? So you can look at these things and you can really try and build your business, things you are already going to do, in a way where they can become tax write-offs. The thing is even if it's only $3,000, $4,000, $5,000 a year, it's not just 1 year. You can do this every single year for the rest of your life. So if you're going to, between now and retirement, if that's going to be 30 years, that might be worth $100,000, $150,000 for you. Just because you took an extra half an hour and you thought about, we're already using the house, or we were thinking about renting other facilities, why don't we use our house and rent that for the business so we can do it for our facilities? Then you're going to be in great shape. This isn't something to abuse. This isn't something that you make up or whatever. But if you're already going to rent other facilities, you're already using your home, these are legitimate things you can do to be able to write this stuff off. Once again, check it with your CPA. Make sure the things you're going to plan or the things you're going to do qualify. But this is something that I see like 90% of people are totally missing out on. This is something that will put real money in your pocket every single year for the rest of your life. Now, if you're not a business owner and you can't rent it to your business, maybe you do take those times like Sundance, you leave town and you rent your house out, right? You can do that. It's a little different. You have to get your house ready, you got to list it, all that stuff. So it's a little bit more trouble. But if you were going to go on vacation anyway, why not go on vacation when it's a prime time in your area and you can go somewhere else where maybe it's not their prime time? For example, Sundance is prime time here in Salt Lake City, but if I go to San Diego on a little road trip with my family and spend a couple days down there, it's the middle of the winter. It's great for us to be down there. It may not be prime time for San Diego, but we can get great deals down there and we can make a premium renting our house up here, income tax free, right? So those are things you can weigh out. It's much cleaner and much better if you have a business because then you don't have strangers coming and staying at your house. But this is something that you can do. Or if you already rent your house out because you travel or whatever, pick the 14 best days of the year and rent it out and pick those as your 14 days for your tax-free income. You can do all this stuff with the help of a tax professional and put more money back in your pocket. Because the bottom line with taxes is this: it's not just one silver bullet in most cases. It's a strategy like this, and then we have another strategy, and another strategy, and another strategy, and before you know it, you're saving $5,000, $10,000, $20,000, $50,000 a year in taxes, completely legitimately, completely blocked out and documented, so you're rock solid, and you get to keep that money legit. Where I come from, that pays for a lot of college, a lot of vacations, a lot of good times. So, once again, if you like this stuff, give us a like on the video so we can share it with more people. Subscribe to the channel. We got more of this stuff coming. And if you'd like to know a little bit more about some of the financial strategies we teach or whatever, I've got a video right here where I talk about the difference between term insurance and whole life insurance. A lot of people don't know the difference. Really important to know. So check out that video and we'll see you on the next one. Thanks.